IT major Tata Consultancy Services will kick off the September quarter earnings season today. Wipro and HCL Tech will announce their numbers on October 12, followed by Infosys on October 13. Despite lingering fears of a recession in the West, analysts expect the IT pack to report decent revenues this quarter, supported by firm digital spending and deal wins. They expect margin pressures to continue in Q2 due to wage hikes and back-to-office costs. Attrition rate, on the other hand, should start to come down as the macro environment gets impacted. More importantly, analysts expect total contract value or TCV would be softer as no large deals have been signed during the quarter.
We are expecting that IT would perform better despite there being a concern in US regarding slowdown and also other macroeconomic challenges. So in terms of revenue, we are expecting that large cap would post around 2 to 5% quarter on quarter revenue growth in constant currency, while mid cap companies would post around 3 to 6% revenue growth quarter on quarter in constant currency. And this growth will be largely led by ramp up of their deal in the previous quarter as well as their new deals won in this quarter. Now talking about margins, yes, margin have corrected around 300 to 400 basis points from pre-COVID levels. And this quarter, we are expecting margins to be around flat to say downside of 50 to 80 basis points due to expense like on-site and wage hike that some company have taken. However, we are seeing that there is limited scope for downside. And beyond Q3, we are expecting margins to improve.
Sharing similar views, Omkar Tangsale, Senior Research Analyst at Axis Securities, believes that IT spends and demand for digital initiatives have been resilient in the recent quarters.
The IT spending from these North America and European regions likely to remain resilient for this quarter at least, owing to the demand for the digital transformation and cloud transformation, which we believe likely to remain intact at least for the quarter. We do not see any spend cuts on this quarter for the large clients and also from the various geographies like European and US region. We expect margins likely to remain under pressure, which will likely to be offset because of the attrition level moderating and some comfort from the dollar appreciation and rupee depreciation.
From large companies, Kotak Institutional Equities expects Infosys to be the lead winner with a 4.7% sequential revenue growth in CC terms, followed by Wipro, TCS and HCL Tech. Among mid-tier firms, Mindtree is likely to be the top performer with a 5.5% sequential revenue growth, followed by L&T Technology Services, LTI and Mphasis. Meanwhile, on the bourses, the Nifty IT index is down 28% for the year, while the Nifty index is nearly flat. The correction has largely been due to the derating of valuation multiples, experts believe, but they do not see more downside potential for the same. According to HSBC Global, valuations now look reasonable, broadly in line with 5-year averages and the market. So unless key markets like US and Europe suffer prolonged recessions, dragging Indian IT growth to mid to low single digits, the valuation downside risk looks limited. Hence, we expect IT stocks to compound with earnings. The US monthly jobs data is likely to sway market mood today, as the street will track global cues along with rupee levels against the dollar.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.